Hi, and welcome to Your Prosperity, a podcast series on financial topics including tax, wealth creation, superannuation, lending, audit, and many other things that we deal with here on a regular basis at Prosperity Advisors. As with all financial podcasts, any advice you hear in this is general in nature and not to be relied upon. Please contact us for any specific advice. Hi, and welcome to the podcast. Today is the 26th of October, 2022. I'm here with Charles Yuan from Prosperity. He's one of our tax experts, and we're going to talk about the federal budget. So obviously that was handed down last night, or not obviously, but for those accountants in the room, we obviously do enjoy the budget. And this is Labor's first budget. So Federal Treasurer Jim Chalmers has handed down the first budget for this new Labor government. And really, I guess it's the idea of a budget. It's the election promises they make. It's when the rubber starts to hit the road and they start pushing these things through to try to get done what they promised they would do. But always keep in mind the budget isn't set in stone. There's sort of two levels of promises. There's what we're going to do when we get into government. That happens pre-election. Then they put things in the budget to get through. But it still has to get through the Parliament, so through the lower house, which it should obviously get put in because that's the government proposing it. But then it's got to get through the upper house as well. So this is what they're proposing to put through, but this isn't actually cleared through the upper house and not even technically through the lower house at this stage. But really important to keep that in mind. So the stuff we're talking about should happen, but definitely does not always happen. So Charles, thanks for joining us. How did you enjoy the budget?
Yeah, it was actually a great night last night. Listening to what the new government is proposing to do. Some people will think it's a breath of fresh air. Wrong way around. Didn't get much sleep. Obviously there are detractors, on it. So two sides of the fence, and we try to take a very neutral perspective and say, "Oh, this is exactly what's happened, and this is what it means for our clients and listeners."
Are you suggesting we stick to the facts and don't make it political? It's probably good advice.
Yeah.
In the budget, I guess there's a fair bit of stuff that comes out, and we're probably going to focus more on the tax changes or the tax announcements, given that's probably our broader listening base. But obviously, there was a lot of other things in the budget. So there was under the cost of living stuff, there was changes to the way childcare is done, and they're proposing that childcare rebates are a bit differently. Under skills, they were talking about TAFE, where they're going to put make it much easier to get, basically free TAFE is what they're proposing. So there's a fair bit of money being thrown at that. Paid parental leave, I think currently you get 18 weeks. It's incrementally going up, 2 weeks at a time, up to 26 weeks, and it'll be available for mum or dad, I think was the sort of gist of it there. So a lot of those things have happened in the budget as well, but we're probably going to talk a bit more about these tax items. So Charles, tax, we love it. I've got a passion for the EV one that's coming through, but we'll get to that. Talk to me about the superannuation, I think was the first thing we were going to talk about. Talk us a bit about this downsizer changes.
Yeah, so there's this thing called a downsizer super contribution, where if you sell your principal place of residence, you can put part of the proceeds into super on top of any caps you already have. And currently it's the age limit is 60. The government's proposing to drop that down to 55, so that it encourages more older Australians to sell their house. Whether you actually downsize or not, that's not the requirement. The only requirement is you sell your main residence and buy a different residence.
Yeah, so, that's an interesting one from a few years ago, isn't it? You don't actually have to downsize to get a downsizer.
Correct. Yeah. So obviously this was a policy from the previous government, but Labor's expanding on it.
And it's interesting that the idea of those caps, I guess, you can often use those so it's not a tax deduction you get in, but one of the things of super is it's hard to get money into super. And if you make, I don't know, some of those older Australians who are, maybe looking at using this, they might make $1 million or $2 million in the sale of their home, which can actually happen these days with increasing prices. Exactly. They make a couple of $1 million and they've got money to put somewhere. They can max out their non-concessional caps, but they've still got extra money hanging around. And if you can put an extra 300,000 each into super, it's just a good place to put your money, a good tax-free environment, tax-effective environment, and sometimes tax-free. So yeah, I guess it's just reducing that from existing legislation from 65 down to 55 is the proposed.
Yeah. I mean, as a hypothetical example for how it may apply to someone, especially with Sydney house prices, if you sold your house and you were using this, you could potentially, between a couple, put $1.3 million into super. Using all your available caps and everything, that's a huge lump sum you can put into super. And if you're already 55, you're not that far from what they call the preservation age, then you can access as a pension and draw out income tax-free potentially.
And that's obviously assuming you haven't already, maxed your caps out or anything else like that through the last year with the bring forward rules and things like that. So absolutely. So 1.3 is a fair bit you can start pumping into super. So big benefits there. EVs, electric cars, Charles, we've talked about this. I don't know how many times, but can't wait for this one to get through. I think we've done it on a podcast too. We've talked about it, but I got all excited when I was reading it last night, going through the EVs and the plug-in hybrids and the hydrogen fuel cell cars. And we'll go through it again. I'm sure you'll go through it in a moment for us, but I got very excited going, yes. And then I realized, hold on, this is just in the budget. It's actually still going to get through. So for anyone else out there like me getting a bit excited by this, it is still with the upper house. It has not been passed yet. It's already been pushed through the lower house. So it's waiting for clearance from the upper house, and the Greens are apparently stalling a bit on wanting to exclude plug-in hybrids from it is the story, but we'll see how it goes. So this one, like everything else, is proposed, but it's kind of was proposed 6 months ago, but it's in there. I read it again and I got excited again, but we're still waiting. But for those who haven't heard about it, Charles, talk us through EVs and why it's beneficial for employers to provide it to employees.
I mean, there's two major parts to it. One is the government will, as part of this bill, reduce or make import tariffs exempt on eligible cars. So the idea is the cost of electric cars will drop. And then secondly, the most important part for our clients is it will be potentially exempt from FBT if it's under a certain car limit. So all your Tesla 3, Nissan Leaf, Hyundai Ioniq, all those lower end of the spectrum, those cars will all be exempt from FBT. And
which is
great
huge,
news.
really, isn't it?
Yes, because if you think about it, most people who buy a car through their employer or through their business, you don't use 100% for business. So there is a private component, and depending on how it calculated, you could end up with $10,000 a year in FBT payable. That's potentially exempt now if this bill comes through.
Yeah, and I guess that a worked example of that is just, and that amount we're talking about that it's got to be under is 84,916 for the current year, but it'll obviously go up with the luxury car tax threshold for fuel efficient vehicles. A worked example, if you buy a $50,000 car and you say you provide it to, if you run your own business and you provide it to an employee of your business, which may be you or your spouse or something like that, if they're working in the business, you provide them with a vehicle, the company or the business or the trust gets to claim all of those expenses associated with that, including the purchase. And at the moment, you can pretty much claim the whole depreciation amount. You write it off in one go for the 2023 year if you take delivery before the end of June. All the expenses, the rego, the insurance, there's no fuel, but the rego, insurance, etc. Claim all of those. And that's $50,000 tax deduction just on the car. At the end of the year, you've got to do an FBT calculation where, assuming they use it 0% for work use and it's used 100% for private, it's just provided to an employee as a bit of a benefit to them. Normally, you'd either pay fringe benefits tax on that, or the employee would have to make a contribution at 20% of the value of the car, the cost price of the car, to not pay, so the business doesn't pay FBT on that. 20% of 50 grand is 10 grand. So an employee would have to make a $10,000 contribution back, which is income to the business, to not have to pay FBT on that. That $10,000 now just does not have to be paid. So there's, assuming you're paying tax at 47 cents in the dollar or so, then that's $5,000 every year that you're saving if this gets through and you're providing a $50,000 car to an employee. It's basically
Exactly.
$5,000 after tax saving, 7 or 8 grand if it's a bit more expensive car. Yeah, and then obviously you're claiming all the deductions for everything else as well. So that's compared to current legislation, but it's obviously a much bigger advantage if you were just owning the car in your own name as it was anyway. So yeah, huge thing if we can get it through. And I'll stop going on about it because it's something I've been excited about for months. And as I said, it's not through yet, but I wished it was.
It's very close, Brendan. It's very close. Fact, it's already had its second reading in Senate before the Senate took their break. So the Parliament will reconvene from this week, and it just needs to go through its third reading, be approved, and it's ready for royal assent. It's very close, Brendan.
But let's see. Talk me through some other things in the budget from a tax point of view, Charles. What else was out there that might be relevant for our listeners?
Yep. So obviously those are the 3 big tax and business ones, but there's also a number of ATO, tax administration initiatives. So one key one is the ATO. They have a anti-avoidance task force. So obviously, as the name suggests, it's tasked with finding and plugging tax gaps where people are, avoiding tax. The key areas that focus on is personal income tax, making sure people disclose all of their income and claim the right amount of deductions. Also, there's a thing called shadow economy, where people may be operating by cash under the table, that kind of thing. The ATO is getting more funding and an increased mandate to target those. So expect to see a lot more compliance activities, especially in individuals and smaller businesses side of things.
The cash economy is an interesting one. I think that's going to solve itself over time. I just don't see. I don't carry cash. I haven't used cash in a long time. I think everything's tap and go these days. It's you can't use cash anywhere, it seems, at the moment. But I think that might try and right itself through naturally and through technological changes. But yeah, they're spending a bit more money on that. They're talking about big multinational stuff, probably not as relevant for most of the listeners, but there's some big changes to thin cap. Well, not big changes, but they're looking at, I guess, multinationals and trying to get a bit more revenue that way.
Yes.
What are some other things? There's some things that aren't in that, I guess, are removed from this as well. One of the things we were talking about earlier is that SMSFs, there was a proposal about doing a 3-year, you order every 3 years and not every year, but I think that's officially scrapped now. Is that right, Charles?
Yes, that's right. Some of the listeners may recall previous government announced, why don't we, for self-managed super funds, simplify the administration and compliance process by changing the audit requirement to once every 3 years instead of once every year. That's officially been scrapped by the Labor government. So everything is status quo for self-managed so far.
Yeah. Okay. What other stuff is in there? I think there was something about pandemic support was being continued. Is that sort of a big impact?
Yeah. So the pandemic disaster leave payments, I believe was the cause. So if you were affected by the pandemic and you had to take leave and you didn't have enough leave from your employer, you could claim an amount from the government through Centrelink. That's being officially stopped now because the changing rules around COVID. But a new payment will replace that for workers in specific industries. So following on the Labor's commitment to aged care, disability services. So this new payment will continue to be available to workers in aged care sector, in disability supports, in any Indigenous support organisations. So all of that will still remain to support our most vulnerable people.
Yeah. So there's a few things in there, but all in all, and we were probably talking about this earlier this morning, all in all, it's a bit of it's focused on a few specific areas, but it's really just trying to hammer home what they promised and what they said they'd do, which I guess is what their first budget should be. Was there any surprises in it, or nothing too big that you saw, Charles?
Well, nothing really surprising, to be honest. I felt the Labor government stuck to their election promise. Everything that they said they were going to do, that they did. And there's nothing really surprising from a tax and business world's perspective.
And it sounds like we're going to be in debt for a fair bit longer. They kind of alluded to in there as well. So we've got a fair way to go. I mean, get out of that.
The government needs their revenue. They're looking to plug the tax gap, as they call it. So for our listeners, as I mentioned, with the increased funding for the ATO, expect to see more compliance activities, more scrutiny, increased use of data matching, all kinds of things, for the government to raise more revenue and
or to make sure they're getting the share of revenue,
getting the fair share, Yes.
Yeah. No, appreciate it, Charles. Look, it was, as we probably thought, it was probably not an exciting budget. As I said, I got very excited when I read the EV stuff again, but then realized it's still got to actually get through the upper house. So hopefully that's happening soon, and we'll have to do another podcast when that gets through, Charles, and I'll be very excited. But thanks for joining us today, Charles. How do they get in contact with you? What's the best way? Email?
Yeah, by email, cyuan@prosperity.com.au.
Yeah, we'll have it in the notes.
LinkedIn. Yeah,
LinkedIn, on the website, prosperity.com.au. Exactly. So please, if you like the episode, like and share, and like the series. And Charles, thanks for joining us, and thanks everyone for listening in.
Thanks. That's great. Thanks, Brendan.
Thanks for joining us for today's podcast. Hopefully you liked it, and if so, please give us a few stars, like and share. And if you'd like to follow the series, please subscribe and pass any information on to your friends as well if you think they might like it. For more information about who we are, head to prosperity.com.au and follow the links.